Hi, everyone. Thank you for joining us today in this webinar entitled Digital Assets and Whether It Should Be a Significant Part of Your Investment Portfolio. My name is Joe Liu, and I represent the Malaysian Chamber of Commerce, Hong Kong, Macau Trade and Services Committee. This session is hosted by both MAYCHAM and the Belgian Chamber of Commerce. Thank you for your time today. Let me first introduce our two panelists and my good friends. First, we have Lucy Yasmararian. Lucy is the founder and managing partner of Token Bay Capital, a Hong Kong-based early-stage venture fund that invests in digital assets and blockchain companies. She's also a board member of the FinTech Association of Hong Kong and founder of Women in Crypto Hong Kong. Prior to founding Token Bay Capital, Lucy was a senior leader of PwC Hong Kong crypto team. She also spent 16 years in banking with Goldman Sachs, Credit Suisse, Schroders, and Kleinwort Benson. Let me also introduce Esme Powell, who is our other guest speaker. Esme has over a decade of experience at leading investment banks and consultancies, where she and her team advise global funds on investment opportunities in technology and innovation. She was most recently ranked among the top 3 best regional analysts for internet and software services in the 2021 Asia Money Brokers poll. Esme supports Emergent X, a crypto philanthropy project in which she leads the development of authoritative and institutional grade insights to accelerate digital asset adoption. So what I will do with today's webinar is I will first ask Esme to speak because she has written quite a mammoth 280-page report on 2022 outlook for the digital asset sector. And I think that's a good starting point for this session. And then we will have a fireside chat between Lucy, Esme, and myself. In the meantime, I will try to keep it as casual as possible. So please do post questions on the Q&A or on the chat box, and I'll pick them up as we go along. So without further delay, Esme, the floor is over to you.
Right. First of all, good afternoon, everybody, and thank you, Joe, for the kind introduction. It's a pleasure for me to be here today with Lucy and Joe to share our views on digital assets. And first of all, I'd like to walk through a brief 10-minute introduction on digital asset outlook, and that will set the stage for our discussion going forward. So just let me quickly toggle this.
Esme, you can go to the screen to make it the full version at the bottom.
Sure. I think I'll just leave it at this. And the other thing is, thanks very much, Joe, for the introduction. So in terms of the big report, so we kindly sought the advice and also the insights of different people in our community. So that includes the builders, the investors, and also the pioneers. So we have some blue chip names that have contributed to our insights. So this is a community effort as opposed to just our team doing it ourselves. And so thanks again for the introduction. So in the following 10 minutes, I'll give you a quick tour as to what's in store for 2022. I'm going to keep it brief, and we're going to cover 6 themes in 2022 that's going to be the front and center, and that we as investors and market participants should focus on to best position ourselves for the future. So first of all, before we understand what's going to happen in 2022, let's focus on what happened in 2021, which will shape our narrative. And first of all, so I'm sure we all are aware, crypto market cap hit a new high in 2021. It fell again now, but that signals institutional adoption. Second thing, we had a Bitcoin ETF, the first one that was approved in the US. El Salvador became the first country to officially adopt Bitcoin as legal tender. And to make it more interesting, I'd like to play a video for all of us to just go through all the top 12 events that happened last year. Whoops.
Hey, Esme,
Yes.
there is no volume or no sound on the presentation.
Wait, there's no narrative.
All right, sorry.
Yeah. There's no voiceover. Right. Yep. Hope that will give you a good yes.
Esme, can you also make it full screen because it's turning out a little bit small on some of the
Okay, sure.
Sorry.
Yep. Sorry, what can you remind me what's the shortcut
It's
to
just the bottom right. There's a little no, the other way. The next
right?
one. The next one.
This one.
No, the next one on the right. Click that.
Oh, here, sure.
Oh, perfect. Thank you.
Right. Okay. Yep. Sure. Thanks. And so, without further ado, so I'll just go through what the key theme is and how we see it is that for the year of 2022, so it's going to be a year of consilience. Consilience means the joining of different principles. So for one thing, what we're saying is that for centralized finance and decentralized finance, they're slowly merging, and that's with the blessing of the regulators. The second thing is you see the intersection between GameFi and also DeFi. So in order to improve the UX of a lot of DeFi projects, you see that GameFi is accelerating the adoption as well. So that is going to set the stage for our discussion and how this all came about. So when we began this project, we asked us one key question. What are the pain points of this industry and how we will solve it? So the pain point is that the industry is opaque. There are a lot of different voices. So in order for us to help the investors cut through the noise and get the signals, we reach out to many different industry participants to ask them what their views are. And the report that came out of it is basically an amalgamation of all the perspectives that are coming into place. And to give you a background, so we spoke to pioneers such as Amber, Animoca, CoinFlex, Free Arrow, Sandbox, and these feed into our different themes, which I will share in the following slides. So for the first slide, so we have many different community representatives coming forward to us to share their viewpoints. But then for these three projections, so we primarily took the views of our three representatives. And then for the first point, so we're going to see the crypto and traditional economies converge. So that's not so surprise to us. So what we're expecting is that number one, there's going to be a partial regulation of decentralized finance. And we already see some certain projects such as RFA having a KYC, and that's going to pave the way to more institutional adoption. Because to give you a background, so for decentralized finance, what they're eyeing is a very big market share in terms of institutional and traditional centralized finance ecosystem. And the same goes for centralized finance, as they see DeFi as a very big pool of total value locked. And the second thing is they're essentially a mirror image of what is available in centralized infrastructure. For example, there's borrowing, staking, but without intermediaries. So they're reducing the they're increasing the cost efficiency. The second thing is that blockchain pays the way for higher financial inclusion. So we're going to see a higher breadth, a wider breadth, and also deeper market capability. And that's going to pave the way for supporting the underbanked, which is the core focus of blockchain technology in the financial use case. And the third thing is we expect that we are in 2021, so a lot of centralized finance providers, they already targeted digital asset exposure is a necessity. And you can see that with JP Morgan just putting out a report on Metaverse, and also Goldman ramping out their digital asset capability. So this year is going to see a reinforcement of what has already happened in 2021. And then we also see many different funds starting up, and also family offices plowing the capital and allocating their capital into this area. So that wraps up theme number one. And theme number two is NFT and Metaverse. So for this aspect, we're very honored to have different market community representatives contributing their viewpoints. So the first thing is we already saw that many of the corporates and also brands are and also celebrities are going to NFTs. So there's Snoop Dogg and Sandbox. That's one example, but there are many more. So last week I was on a panel. I was moderating a panel with Sandbox, Animoca, and also Blue Arc. And what they're doing is they're building a joint mega city project in the Metaverse, and that includes Hong Kong developers like New World Development. So that's essentially going to pave the way for more of this inclusiveness. And the second thing is connected metaverses. So right now, for a lot of video gaming projects, even if it's the AAA projects, so we see that a lot of players, when they earn a skin is a virtual token in a certain game, they're not able to bring it across to other metaverses. So with new decentralized open metaverses, that is essentially going to solve the problem. And for example, if you get a skin or a virtual token in Grand Theft Auto, you're going to bring it across to another game, such as Lufia, for example. So that's what is going to cultivate, digital asset ownership. And for the third projection, so from our conversations with different builders of open metaverses, so this year we're going to see a battle between crypto native and also centralized metaverses. So for centralized metaverses, we saw that with Microsoft Mesh, and also the second thing is of course Meta. And for crypto native, so there's Decentraland, there's Sandbox, and then basically they have competing ideals. And we're going to see that they're going to fight for user attention. With this fight for user attention, that's going to bring about improved user experience for us. So that's a benefit for us as consumers. And another projection is that, that's my personal view, we're going to see the first lawsuit in Metaverse. The reason for that is there's essentially a battle between these two players. And with these two players, so something that needs to be defined. So for digital IP law, right now it is very focused in, it's territorial in nature. And the second thing is it's also very focused on what happened in the past. And Metaverse is a very dynamic proposition. So that's going to lead to a lot of clarification needed for regulations. And for our third theme, WebFree, so that's the future of the internet. And that's very blockchain driven, token driven and also decentralized in nature. So that's very different from Web 2, in which all the user data is being monetized by centralized entities. And for our discussion, so we spoke with investors who are investing in the blockchain phenomenon, and also a platform that is building an NFT marketplace. And what we see is that just going back to our last projection for NFTs, so there's going to be a competition between decentralized and centralized entities. The second thing is we're going to see new Web3 use cases. So how we define Web3 is that it's the X factor. The focus is the unknown unknowns. So we're going to see, given that in 2021, we saw a lot of capital being deployed into Web3. So 2022 is the year in which a lot of projects need to prove themselves. And as a result, we're going to see a lot of innovation being driven out of it. And the third thing is for Web3 companies, so they will need to scale up the ecosystems beyond the crypto native early adopters and scale it beyond that to the global audience. For the fourth theme, so DeFi, I've already touched on that very briefly in the first point, but for DeFi, I think the focus would be partial regulation. So the conflict that regulators see, they have to balance the shared interests of centralized institutions and also not to stifle innovation. As a result, partial regulation is a very likely outcome. The second thing is just going back to the first point. So we will see a middle ground between, say, decentralized finance and also centralized finance. So one example that we expect, again, that's our personal view. So prime brokerage would potentially be an area that would see settlement between crypto native and also traditional finance products. And that's an example of how we will see a middle ground. Second thing is also the example I gave for certain DeFi projects in which they're already onboarding KYC procedures in order to see more, more of a collaboration with centralized finance. The third thing is about next-gen DeFi protocols. So that's also what we call as DeFi 3.0. And given that, that's going to improve a lot of the existing problems, such as solving impermanent loss. And that's going to be a key value add going forward. For the fifth theme, so for regulation and institutionalization, we reach out to some of the key global payment players and also chief legal officers of certain exchanges. What we're expecting is that we are going to see, so that's a consensus view. We're going to see tighter regulatory environment this year. At the same time, that's going to reduce the opportunity for regulatory arbitrage. So for example, what we saw in the past is that a lot of different exchanges or VSPs or crypto players, they will migrate to different jurisdictions to see which is friendlier to their operations. This year, we're going to see a key tightening. The second thing is that regulators and traditional finance players, they'll need to scale up their game in order to compete effectively with a lot of their competitors. So one quick way of doing it is that we're going to see a lot of M&A interest in 2022 with regards to TradFi players buying their way into the digital asset space. And also, just to give you an example, so yesterday there was the announcement of Temasek investing in Amber Group. So that's an example of traditional funds investing into crypto native plays. The first thing is we're going to see risk-adjusted returns slowly come down. This will not be a 2022 story, but very likely it will happen beyond this year. The reason is that when institutional money comes in, so we're going to see a higher correlation between crypto financial products and also traditional financial products like risky assets such as equities. So as a result, we're going to see this institutional interest lead to, in order for investors to get higher alpha, they'll need to adjust their trading strategies to cater and also adopt to the changing environment. And for the sixth theme, given that we are a crypto philanthropy project, so we also focus on crypto philanthropy. Given that so much wealth is being created in this space, we expect that crypto giving will be a key theme, and we hope that it would be. So right now it's a predominantly North American phenomenon. We expect that to go beyond the borders and then into Asia, given that so much wealth is being created in this space. So for Emergenics, we work very closely with Room to Read in order to support their crypto philanthropy infrastructure with that was powered by the Giving Block. So what's going to help is a clear regulatory requirement on tax treatment, and that will be very supportive of crypto giving. And this was a previous announcement that we made in conjunction with Room to Read with regards to our crypto philanthropy partnership. And quickly, this is the last slide, and about Emergenics. So we are a community-driven effort in order to provide digital asset insight. So again, this is not, the insights are not solely driven by our team, but driven by our community. So the end audience would be an inclusive effort to include investors, institutions, and governments. So for example, what we see in US was a CMIC, Crypto Market Integrity Corporate Alliance. And what we expect is that is a very inclusive effort of different digital asset providers coming together to inform and also to let their voice be heard by the regulators. And that is a very similar initiative that we're driving within Asia, and that will hopefully pave the way for closer working and collaborative relationship between the VSPs, crypto natives, TradFi, and also the regulators. So thanks very much for your attention, and I'll pass the stage back to Joe and Lucy.
Yasmin, thank you very much for that. Lots of stuff to unpack there in a short period of time, so very concise. Firstly, I want to apologize for announcing a co-host. It should be the co-host should be the Belgium Luxembourg Chamber of Commerce instead of Belgium Chamber of Commerce. Apologies for that. But now moving on, I think one of the most interesting topics today I want to bring out is this talk of a crypto winter. And I think we see that in the press a lot, and it stemmed from some of the coins having collapsed or having declined significantly. I mean, we've got Bitcoin going from 69,000 high to around 37,000 US dollars now. For Ethereum from almost 5,000 going down to around 2,600. Now, I know the both of you are SFC regulated, so you cannot give investment advice publicly. And what you say is only purely for information and educational purposes. Having said that, though, I'd be very keen to hear your views on what's happened, what's going on, what are key drivers going forward that you can identify. And of course, there has also been a lot of discussion about digital assets being a diversified investment class. But what we've seen over the last few weeks does not seem to indicate that it moves differently to other major asset classes. We've seen equity markets come off, we've seen bond markets come off, and crypto has gone in the same direction. So some thoughts on whether that's one-off or in the future it could behave differently, or what are the drivers would also be interesting. So maybe I'll pass it to Lucy first to share her thoughts, and then move over to Esme. Thanks, Lucy.
Great, thanks, Joe, and hi everyone. Thrilled to be part of this. Great to have the discussion framed by Esme. So we've got our top key crypto outline. So coming on, yes, and I would just like to reiterate, nothing I say in the course of this webinar is financial advice. So talking more generally about the markets, I think the parallel that you can draw with crypto markets, that you can draw with traditional financial markets, is that it always depends on an investor's time horizon. You can look at Bitcoin and say it's dropped 30% over the last year, but if you look over 2 years, it's up almost 300%. So, it's the same as stocks. It's the same sort of philosophy. The other point I think is really important to make is that crypto as an asset class is really a teenager. I mean, I think we're coming into the 14th year of an entirely new asset class. And it's the first time that we've got an asset class that you can invest in, but you can also participate in. This is the first time we've got financial freedom and the tools to actually create wealth and value ourselves by interacting with the crypto ecosystem. So that's really the paradigm shift that's going on and making this way more complex as an investment landscape than it's ever been before, because typically stocks and bonds, there you go, you invest in those instruments. But with crypto, you can either invest in Bitcoin or Ether, but you can also take part in the build out of the ecosystem and start earning crypto. So investment's not the only way to get your hands on crypto. As a result of such an enormous innovation that I think is only just beginning, we're only just beginning to really appreciate how enormous this revolution is when it comes to crypto and Web3. It's very understandable that there's a great deal of volatility. It's going up, it's going down. We're all sort of figuring out what the opportunity set actually is here. And on top of it, we've got regulators that have been scratching their heads, I think, very concerted effort over the last few years, but in all fairness to regulators, and if we've got any on the call, that's great to have you. They have been looking at this for quite a number of years. China obviously leading the way. They were very quick to react to Bitcoin and the promise of the technology. And so their response to how to regulate this asset class also really contributes to the volatility, because it creates that level of uncertainty of where it's headed and how the space is exactly going to be shaped. So there's a lot of really interesting, unique dynamics here. And as an investor, you need to take that into account. It's no longer straightforward investing. I would say it's three-dimensional. So, it requires application, and that's the great thing about it.
Thanks. Esme, any additional thoughts?
Yeah, I think in my view, so Lucy has summarized it very well. I really like the statement about crypto being a teenager. It's still a very nascent opportunity, and there's the X factor unknown unknowns that we are going to explore more. And as Lucy also mentioned, so it's a community effort, and not only do we get to invest, we also get to participate. So quickly with regards to the price weakness, so certainly there's the Fed tapering in the headlines. There's also geopolitical uncertainty, especially given Russia and Ukraine. So what I expect is that for the crypto price weakness to linger, if we wouldn't see the same crypto winter as we did in 2018, but at the same time, so we're going to see continued weakness given that the market is in a rate high cycle, and we also see tightening liquidity. We also see increasing correlation between our risky assets and crypto. So in the longer run, again, what I would reiterate is for investors to focus to either move up the life cycle of crypto projects. So rather than just investing in blue chips such as ETH and BTC, Solana, one way would be to increasingly diversify into altcoins. Or maybe if we look at a life cycle of a crypto project, look at earlier stage. So for example, what Lucy is looking into in her fund with regards to early stage projects, that'll be a way to get more alpha. And the second thing is also if you're a quant trader, so you want to adapt your crypto trading strategies to more diversify. So for example, the crypto derivatives market is slated to be a fastly growing area in 2022. So that's something that you can look out for.
Great. I want to dive deeper into one of the drivers of movements which Lucy highlighted, and that's regulation. And it's quite interesting. We use the analogy of crypto being a teenager, because teenagers also require a bit of discipline and a bit of regulation, I do think. So Lucy, perhaps you can share with us what you think regulators are trying to achieve, where we headed, and how does this give a bit of comfort for your average investor, you think?
Yeah, actually, staying on the teenager thing, you know, a lot of the participants are actually teenagers. You have no idea who your counterparty is in DeFi protocols. You know, some of these hackers can be sort of 12-year-olds, right? So I think it's really interesting to bear this in mind, that it's the first time that decentralized finance has been, there are no barriers to entry to participate. You just need to set up your digital wallet and away you go, right? You buy some ETH and then that's it, your journey begins. So it's really, that's the exciting inclusive side of it. But of course, on the side of like a responsible regulators around the world, how are they to deal with this? You know, they don't even know how to get into the DeFi decentralized applications and services themselves to sort of really understand. So I would say it's the first time that regulators are having to regulate something they really don't understand. And that's really fair, because we're all learning as well within the crypto community. Nobody knows how this is going to play out yet. It's a time of hyper experimentation, hyper growth, and we're really moving into a new era. And so the regulators are trying very hard to, if nothing else, stick to the core values, which are protect investors, right? Protect investors. And it really comes back to the heart of what they're trying to do. And the regulation that they have available to them, you know, it's laws that have come into place in the 1930s and earlier, right? So for a digital modern economy that's moving onto a blockchain, there's naturally going to be quite a disconnect and sort of putting a square peg into a round hole that they're needing to grapple with. So it's really hard to balance those two sides of the equation. And I would say that they're doing a good job if you actually take that environment into account. I would say their biggest challenge is that typically the way regulators approach regulating an industry is territorial. So it depends on the jurisdiction. It depends on what an individual or an entity is doing. So they're holding someone or a company accountable. And the third thing is their ability to enforce. That is how regulation typically happens. And when it comes to crypto, those three things, they cannot do one single one of them, right? So they're really lost. There's no jurisdiction in the metaverse. Who owns what land? You know, the idea of geography has really gone when it comes to crypto ecosystems and metaverses. There is no geography. Which jurisdiction? You know, Bitcoin travels instantly from digital wallet to digital wallet. There's not even time to register the jurisdiction. It's just bypassing territories. How do you hold somebody accountable when, you know, typically a lot of crypto communities are formed from the participation and input from hundreds, thousands of individuals. It's not one single company, person, corporate that is driving a particular good or service. And enforceability, how do you enforce when there's barely, in many instances, we are getting better, but there's very little KYC, which is know your customer, or having even your digital identity known as you're, you know, working your way around all these new crypto ecosystems. You don't actually know who is behind the wallet address because you don't have to have your identity shown. So there is also no way to enforce. So it is very, very challenging for regulators. So that being said, they can't leave it. They tried to leave it for a period of time, and suddenly it's 1 trillion, then it's 2 trillion, and as may say, we're coming to 3 trillion market opportunity, and it's transforming finance, and institutions are interacting with DeFi. No longer can this be an unsolvable problem. So the regulators really have to speak with the industry, because what is needed is for them to really fully understand that you're starting to regulate technology, not people and not corporations. And that's hard. You know, regulators, central banks, they're not tech companies. They don't know how to regulate software until code itself, because crypto is software, until it becomes self-regulating and the laws are coded in, if you like, and collectively we've agreed what that is. I think it's going to be a very difficult time. But I think at the core of it, it's KYC. and increasingly centralized crypto exchanges cannot take you on as a customer if you don't provide your passport, your identity, so at least they know who their customers are. And increasingly with DeFi protocols, actually there is a way to integrate KYC and have a sort of hybrid, centralized, decentralized approach to implementing these protocols. And that's really important. If nothing else, we actually know that we're not dealing with sanctioned countries, sanctioned entities, with hackers. There's a lot of tracking that can be done. But the very positive note is that when the regulators become very comfortable with blockchain technology, blockchain is probably the easiest thing to regulate, right? Because everything, you've got an immutable record of every transaction that happens on a blockchain all around the world, and you can view it in real time. And you can go back 5 years ago. The Fed is putting people in jail from 5 years ago because they finally got round to sort of unraveling the web of blockchain addresses and where various digital assets have moved. So that's the good news, is there's no hiding. If you make a transaction using cash, then that's it. If they didn't catch you in that moment, it's going to be very hard to retrace steps and come back and put you in jail for an illicit transaction. You do that on a blockchain and they can come knocking on your door 10 years later. And that's even if they don't have your exact identity. There's a lot of cyber intelligence and security firms that are looking to sort of try through IP addresses and various other means to identify who owns or who was behind a particular wallet. So, when they do get comfortable, it's going to be actually much easier for them to regulate everything because it's very transparent. You can audit a blockchain very easily, and those transactions are never going to disappear. So, they're having to become tech savvy, and it's not easy for them.
Fair enough. Esme?
Yeah, so Lucy raised some very good points. I'll just supplement with a few points. So we're absolutely right to say that regulations of technology is looking at the rear view mirror. As you see, even data privacy is something that's very difficult to regulate as well. So not to mention blockchain technology. And the two key points I will talk about is number one, enforcement is going well, especially as Lucy mentioned. So the Bitfinex, they were able to track down the two alleged two suspects. And the second thing I will emphasize is dialogue. So in order to have regulators wrap their head around the key technology, so we will need to have a constant dialogue between the players and also the regulators. As I mentioned, so CMIC is something that's very encouraging. So that's short for Crypto Market Integrity Coalition, in which 70 crypto firms are coming together in the US to work with and collaborate with the regulators to ensure that there's market integrity. So I look forward to having one in Asia, and Immersionix is very much helping to drive this. So in March, we're going to have a panel, a full day of conference in which we're bringing together government represented by Invest Hong Kong, and also different blue chip and also top tier VSPs, crypto players, in order to drive content dialogue. And that's only the start of a series of key events, also initiatives that we're driving. So just to summarize, I would say that dialogue, communication, and also enforcement are key. And I think regulation is the future direction of travel. And I would say that we're on the right direction.
Great. I want to also move on to NFTs. And Esme, let's start with you. And if you have that slide handy on NFTs.
Right, sure.
To pull it out. And really, I wanted to ask and maybe discuss a little bit about the NFT market, because it's virtually exploded over the last year in 2021. Admittedly, most of it's driven by art and collectibles and commemorative items. And we've even, as a result, seen OpenSea, which is an exchange for NFTs. I think transaction volume has really gone through the roof. But perhaps, Esme, we can talk a little bit about how you think the NFT market will evolve. And I think it's going to I think in your last research, you talked a little bit about it moving away from just art pieces into more utility like users, and how that sort of increases value, increases stickiness, and increases the likely number of people that are actually looking at NFTs and trading NFTs. So perhaps your thoughts on that?
Right, sure. Yeah, thanks for a very good question. So for NFTs, let's take a step back and let's look at what it's trying to address. So by its nature being non-fungible, it's basically evolving and also transforming a lot of the digital IP discussions. So it's basically having digital IP rights on the blockchain. In terms of future, so I would say that the key concepts that I'll be highlighting would be community support and also the X factor, which is what we're going to explore. And the third thing is institutional participation. And the fourth thing would be with regards to the continuous evolution. So just going back to institutional participation, so we already see a lot of brands and also marketing departments incorporating NFTs and Metaverse into their digital marketing strategy. So that's one. In 2022, we're going to see more developments in that area. The second thing is about community and natural selection. So right now for NFTs, I think we're at close to the peak of the hype cycle. What that means is that we're going to see a natural selection. So right now there's a long tail, and a lot of NFT projects proclaim that they're supported by the community. So it's right to say that a community is a key component for NFTs. At the same time, there's some projects that might be taken out of circulation. The reason for that is some of them might be quick cash grabs or rug pulls, and that's something that investors should be very careful about. So in the longer term, it will be those community-driven projects with a big community rallying up behind it. This will be the key projects that will be able to sustain longer term. So not investment advice, but for informational purposes, I will emphasize that investors should do their due diligence and look into community scores, which is the key metric when it comes to following and looking at an NFT project. And just caveat emptor for a lot of investors.
Okay, Lucy, I want to add an additional dynamic to the NFT question, and that's if one looks at NFTs versus coins, and with what Esme mentioned about NFTs being a lot more complicated, should one just not bother? And if one wants to look at investing, perhaps just going into coins instead, because the top 10 coins are a lot more liquid and a lot more tradable. Versus, let's say, an NFT that's a lot less liquid in general. But also keen to hear your thoughts on NFT evolution in general. Thanks, Lucy.
Yeah, I think investing in crypto sort of fungible tokens, so they're fungible as in one US dollar is another US dollar. So one token is the same as another token, but with NFTs, one NFT is never the same as another NFT, because if it's an NFT, it is unique. There's only one of them in the world. So I think with NFTs versus tokens, it's attracted very different users. So NFTs really had their year in 2021. Just to give you a scale, so the sales trading volume of NFTs was 95 million in 2020. And in 2021, that rocketed up to 25 billion in trading volume. That is absolutely astronomical. And it's captured so much global attention because it's not about investors. This is not DeFi, which typically attracts people that are interested in finance. It's not everybody out there that's interested in finance. But NFTs has welcomed everybody to crypto technology because everybody can identify with NFTs. And so as a result, it's been incredible onboarding to the crypto ecosystem of new users through NFTs, because that's what they're interested in. Hey, unique digital art, these crypto punks, even if you think they're ridiculous, they're fascinating nonetheless. I mean, all the headlines with NFTs, starting with Beeple's sale of, pure virtual art for almost 70 million via Christie's really captures people's attention. And it's the way that everyone's becoming, taught, this way they're learning about crypto. So I would say also, let's remember that while NFTs are unique and tokens are fungible, it's the same technology. It's, it's not two different things, it's all crypto. And what we're seeing is, from an investment perspective, because something's unique, you have to rely on someone wanting to also want that unique item, right? It's potentially got a more limited group of buyers that are interested. And there's a lot of criticism with NFTs that people are flipping NFTs, right? They come in, they flip them, they make a huge project and profit, and it's kind of like passing the hot potato around the room. That being said, I think the ultimate use case for digital art and unique items of value on blockchains is enormous. So as an investor, from an investor perspective, maybe you're just more interested in NFTs, and I would say go ahead, start experimenting, because the best thing anyone can do is starting to become familiar with Ethereum and crypto in general. But if it's for purely investment purposes, there is probably a very sensible approach to just buying the top 10 fungible cryptos by market cap. These projects, obviously, we've had huge price appreciation in the last year or so, but these protocols and these, these projects have been worked on for years, right? So they're pretty solid. They're as tried and tested as you can get in crypto, bearing in mind the whole space started with Bitcoin. It's still only 14 years old. So again, it depends on what type of investment preference you have. As in the real world, you have people that like to invest in art collectors, and you have people that like to invest in stocks and bonds. Typically it's different kinds of investors, and all are relevant in a fully diversified investment portfolio, is what I would say. But I do want to draw attention to the greater promise of NFTs beyond being an investment vehicle, if you like, to actually being a way that business models are changing. These NFTs are creating more than just objects. This technology is bringing together anything that is unique, and it can now be fractionalized. So not to complicate matters any further, but you can actually make a unique NFT fungible by fractionalizing it into a lot of different pieces, because these NFTs in some instances are worth millions and they're inaccessible for a number of different investors. So if you start fractionalizing an NFT, you're effectively creating a collective investment scheme, and then you'd be subject to securities laws as well, but very easy to do and very appealing, because then more people can buy some of that Bored Ape or that CryptoPunk, right? I think the floor price is, I haven't checked recently, it's probably come off a lot, but at least $1 million. We're financializing NFTs. And again, it's just showing that it's just layer upon layer, crypto's infinite possibilities. The other exciting thing about NFTs is that you're able to start collateralizing them, so borrowing against your NFTs. So if you're worried about liquidity and you think your tokens are more liquid, there are more and more protocols popping up where you can stake or stake your NFT and borrow against it, because now they're very incredibly valuable items. So actually they are becoming more liquid in that respect. There's so many possibilities. But back to the business model perspective, anybody that creates an NFT, every time that NFT changes hands, the person that created the NFT gets a cut of that sales price. And that's really the revolutionary aspect about this, because suddenly, if you think back to how it's been in the past, you relied on the art gallery, you relied on the music label to promote you. And once they promoted you, they then took all the profits, right? They make you famous, and then very little of that comes back to you as the creator and actually the product. So people are taking advantage of the creators as the product. Going forwards, when creators, musicians, create a song as an NFT, every time that music is downloaded or trades hands or is featured anywhere, particularly in the metaverse, they will get a cut directly into their digital wallet. So it's cutting out all the intermediaries. And the possibilities with that as a concept is absolutely enormous, because it goes back to the financial empowerment of the individual, which crypto is really all about. I'll say one more thing on NFTs. There's also a sort of more boring side of NFTs. We will likely move to a future where your apartment or your house, if you're lucky enough, is an NFT. Your car is an NFT. Everything you own, quite frankly, that you want to register will be an NFT, and it will be tracked and traded and authenticated on blockchains. It's just a better way of storing data about anything that you own or that is unique. So we're also likely to see that. I think China will be very much at the forefront of that, making ownership of assets way more secure and actually creating a easier global marketplace. So if your house is an NFT and the land title is, we have to work on the legality around all of this, but if that's linked to the NFT, it's going to be a lot easier to instantly sell that to someone on the other side of the world, that maybe if they didn't know a broker in Hong Kong or know the lay of the land, were less likely to buy property in that area. But it's going to be made so much simpler, so much quicker. So we'll probably find that we're all investing in NFT properties all over the world instantly. And so that's the, well, it's not boring, but it's just the more sort of practical reality of NFTs. So again, with every discussion we're having, so many different angles that you can look at this, and that's why we all get incredibly excited about where we're headed.
So no, I don't think we can describe this sector as boring. At least I don't think so. There's so much going on. There's so much news. Every day is a different day. And it is good you ended up the discussion with property, because people are buying property in the metaverse now. And that's another topic we'll try and tackle. It's a far wide-reaching and all-encompassing topic, the metaverse, and it also has exhibited staggering growth, and people are sort of clamoring for a way to get exposure to it. We've got Sandbox, Decentraland forming their own sort of metaverse. We've got Facebook converting their name to Meta to try and tap into that. And almost, I sort of feel almost everyone wants to get related to the metaverse these days. And there's lots to talk about, but maybe we'll go back to you, Lucy, because you sort of ended up on that point. But what are the top maybe 3-4 points on the metaverse which you think are important that people should know about, people should realize? And I'm saying that because I know there's lots of stuff out there. There's lots of stuff you can talk about, but maybe just focusing on a few key points. Before we go over to Esme after that, I also want to remind the audience that they can put Q&A up, they can put chat up on the box and type it in, and I'll try and bring up those topics as we go along. So Lucy, back to you.
Yeah, I mean, I think the biggest feedback I get from traditional investors about the metaverse is, what is this virtual land? Like, there's an infinite supply. A project just sets up and they can sell plots of land and say they're only going to sell 10,000 of them, but then another project can do that as well. And so I think it's difficult for anyone to understand this demand and supply structure when it comes to virtual land, when it's infinite amounts can be available. And my response to that is that it's the same with anything in life. If enough people and activity and business is being done in a particular metaverse, it's going to make it more desirable. You're going to want to be there because maybe you can sell your goods there. You can advertise to all the Gen Zs that are in the concerts there. And if that community is within a particular metaverse and you need to buy their specific token to build in the metaverse, to have access to a lot of the goods and services that are being built and properties in that metaverse, then it's going to draw a community, and that's going to be the metaverse that you want to be in, and therefore the land is going to be the most valuable. So it's this concept that actually you can create a community, businesses, I mean, Nike, McDonald's, Gucci, who was the PwC, my old shop, they're all in the metaverse, and they're there for good reason, because it's opportunity. There's opportunity for business, there's opportunity for new revenue streams. And so that's why we're seeing the real estate for these initial metaverses skyrocket, because they are going to be the first ones. So they'll forever be famous in that respect. But everybody's all being driven to the existing metaverses, because even those have not yet been fully built out. So we all want to start building and see what the metaverse can bring us. So I would say first mover advantage is really important, and that is going to hold up the land value in those popular metaverses that are attracting corporations, that are attracting younger consumers, older consumers, that are attracting gamers. And these are all the sort of components that support the land prices. But sure, I mean, ultimately, if you really look at it critically, anybody can spin up a new metaverse. But it's going to be really interesting. I suspect it's going to be like the real world, where certain land is developed and certain land is sort of underdeveloped and no one really wants to go there. I think we'll see that play out in the metaverse. But the reasons why certain land are developed and some is underdeveloped are going to be different to the physical world, which maybe it's because, it's near a sea, or it's a beautiful cliff view. It's going to be different drivers as to what makes metaverse land valuable. But if you want to get, a valuation appraisal on some real estate, there are now companies popping up, sort of real estate experts in the metaverse, that can give you different valuations and perspective on what's going to drive different prices. So we're seeing real estate agents move and develop and adopt a new skill set into the metaverse. So you can always consult one of them if you're interested. They'll probably tell you to buy a plot of land next to Snoop Dogg, and so you're the first to get access to his concerts. But who knows? But the other thing that I'll say, what's so exciting about the metaverse, and why businesses and famous people, so musicians actually primarily at the moment, because they're holding concerts, is because they can hold an event in the metaverse and have way more attendees than any physical stadium could ever hold. They can give that same immersive in-person experience, but yet sky's the limit for how many people can join that concert, and therefore the potential to make so much more money from ticket sales in the metaverse and make it way more accessible to people all over the world is enormous. And that's why they're all jumping in there and trying to establish themselves, because it's a huge, huge business opportunity.
Real estate agents in the metaverse, amazing. Amazing. Esme, your thoughts?
Yeah, just one supplementary comment, and later we're going to see architects, virtual architects in the metaverse. Right. So I would say that just to summarize, so metaverse is a real thing. So it's a irreversible trend. And what we're seeing is because we already seeing a lot of the companies going in. And I think how this begs the question, the onset of travel restrictions is the key reason why we're seeing this huge tailwind for metaverses to thrive. So because a lot of people are not being able to, commute and also meet people, that's why, they would prefer to be in the metaverse. So that begs the question, is it going to continue to thrive when we're able to travel again? In my idea, so that's the litmus test that we should ask ourselves. So if we put our thinking hats on, we will see that the metaverse is in fact opening ourselves up to a lot of different opportunities, and there will be more applications in the future. So my short answer to the question I raised is yes. And where we're going to see the pockets of opportunities are obviously e-commerce, social media, which we already saw Meta building. So that's the centralized metaverse. At the same time, so we saw a lot of concerts being held in Decentraland and also a sandbox. So health is going to one thing, and also education, music, entertainment, and travel. And to determine whether something is a hype or not, we will again ask ourselves whether there's a utility in a community. So these are the two key questions we should always ask ourselves when it comes to assessing different blockchain projects. And in terms of utility, so yes, that checks the box because Metaverse and NFTs basically redefines ownership, and then it also reshapes a lot of the interactions we have with each other and also with the environment. And to further support that, so we're also seeing a lot of entrants, social media, gaming, real estate. So we see the AAA game publishers also being in the Metaverse. And I think that's a very supportive argument for that. So if we look into different pockets of opportunities across blockchain or digital assets, I think Metaverse is the one that has been spiking the quickest, and we will see the most longevity to that in relation to many other areas, just because we see a lot of different corporations and brands already inside the Metaverse. So again, just to reiterate my point, I would say that in the future, in 2022 and beyond, so we're going to see the competition between centralized and decentralized metaverses playing out. So right now, I don't have a feel as to which one is going to win out. It's going to be a very exciting competition that we're going to see this year. And yeah, just look forward to it, especially if you look at Sandbox. So there's so many blue chip property companies already piling in. So that's going to unfold itself into the fabric of our daily interactions.
Thanks, Esme. A couple of questions in the chat box for you specifically, Esme. One is any chance to get a copy of the presentation? I think that's in demand.
Right, sure. Yeah, no problem.
Thank you.
Yep.
And secondly, I'm going to read it straight out of the chat box. If someone is a complete newbie in this space, what is the best space to learn the basics? What happens to demographics that are not tech savvy? Example, the aged and seniors. How do they not get excluded?
Right. I would say that in terms of, so I'll just answer the first question. In terms of somebody who's new to that, so we're all very welcome. So depending on, your demographics, so there are a lot of different industry organizations just supporting education. So for example, I'm part of DWLN and also Satoshi Women. So they do a lot of support and education for women. But in general, so Emergent X is a very inclusive community for everybody. And in terms of some primers, so I will also direct your attention to our 2022 Outlook, and we are very happy to connect you with our community members. Some of them are already coded, for example, Amber and Mocha, and also Sandbox. So these are very useful people to speak with. And the reason I say that is blockchain technology compared to all the traditional areas such as inequities, such as industrials, transport, and also internet. So this is an area in which you have to be in a constant dialogue to know what's going on, as opposed to reading about it. Because anything, as I always mention, anything that is printed is already outdated by the time the ink has dried. So I would definitely encourage you to go out to speak with more people, and please come to me and I'll direct you to different organizations, which are all very welcoming.
All right, thanks, Esme.
Oh, second question about seniors. I would say that to start, so it's a steep learning curve, but I would think that the more inclusive opportunities would be the Metaverse, simply because they make it very user friendly for everybody to get into. So on the other side end of the spectrum, it will be DeFi. So the user interface is still very difficult to navigate, and just putting in a raw wallet address would mean that your funds go into Ether. No pun intended. So I would suggest going to the Metaverse. And given that, there's a constant fight for user attention between different centralized players, so they already have a lot of education campaigns. For example, Coinbase has a few to learn, in which you're being that's pay to play. Pay to play. That means you're being paid money in order to learn about the Metaverse or different blockchain concepts. So I'll definitely encourage these programs.
Okay, another question, I think. sorry, Lucy, did you have something to say?
Learn to earn.
Oh, learn.
Yeah. That's right. That's right.
Okay, another question for the both of you, and this is quite technical and quite difficult, I think. What would you suggest as the criteria to evaluate the value of digital assets for investment? And I'll ask Lucy first.
I mean, we need to start by defining digital assets, because it includes security tokens, NFTs, cryptocurrencies, stable coins, central bank digital, I mean, you know, you name it, right? I think that's the biggest challenge, is there's no set definition of what digital assets are. And it's very confusing to regulate them, which we've already talked about, because, for example, Bitcoin, some people view it as a store of value. So they just compare it to gold and say it's digital gold for a digital economy. Other people view it as a payment instrument and a way to make peer-to-peer transfers of money across the world. So how do you value something when different people use it for different purposes? And that's really the core of why it's so difficult to value different assets. I would say, you know, the price at the moment of cryptos, it sort of goes up and down, 30% up one day, 20% down the next. For even quite established cryptos, you know, Bitcoin's even come off 30%. You know, one could argue that if we all had a really clear valuation framework for Bitcoin, then it potentially wouldn't be quite so volatile. I think that volatility reflects the fact that we're not sure how to value all of these assets yet. And actually, there's new frameworks for valuation coming into play. And it goes way across the spectrum, from how you value Bitcoin to how you value any of these new altcoins, which represent essentially small cap stocks in the crypto ecosystem. You know, you're looking at what the token's used for. Is it attracting users? How many wallet addresses are there? How active are the wallet addresses? You know, there's no set approach to how to value anything. So everybody's coming up with their own formula and approach to different types of digital assets. But, you know, eventually we're going to get there, but that's the really exciting, innovative place that we are in now, that I think it's very hard to determine exact valuations. And that's why when you poll a room and say, where's Bitcoin's ultimate price? It goes from, you know, Kathy Wood of ARK saying it's going to be, I think she said it was 500 million or something. Someone saying it's going to zero. I mean, therein lies the conundrum. You know, if there was a clear valuation framework, it wouldn't have such an enormous range of price target. So I think, you know, the jury's out, and some people will even say, is crypto even here to stay? I mean, fewer people now. I think 2021 was the year that it was accepted that crypto is the future in some shape or form. Still not sure how exactly it's going to play out. So valuation is a tough one. Do your own research is the expression.
As I know you've attempted to answer this question in your report, so perhaps a quick summary of that answer.
Yeah, I would say that I'm thrown that question every day, and the reason is that so my clients are institutional investors, so there will be insurers, there will be, you know, pension funds, and then there are also family offices who are moving into allocating their assets into crypto. So my short answer is that you will not be able to apply traditional valuation approaches for equities, such as or even FX, like stock to flow and DCF. You won't be able to value it, but there are some similarities. So for example, in internet stocks, so we always use PS, and that's very similar to or maybe P to the number of users, MAU. So that's very similar to DeFi, in which we use market cap to total value locked. So there are certain metrics, and then how we look at it is we look at the directional trend. So for example, it's trending up, and there's a disconnect between the market cap and the TVL compared to its peers. So we always draw peer comparison in order to generate actionable insights as to where to deploy capital. The second thing is in terms of Bitcoin, so given that it is very similar to a FX or a commodity, so stock to flow would be a very similar instrument. And the third thing is NFTs. I think that's the hardest question to answer because it's very abstract to have the value community. How do you put a number onto how to value a community? How much, like, is it 1 billion? Is it 1 million? You can't really answer that question. And that's why I say that NFTs is heading towards natural selection, because when a lot of people try to put the lens of traditional finance and to analyze different pockets, different areas of digital assets, that's when you see a convergence in valuation. And if the market consensus comes up with a number in which this NFT project should be valued in a certain way, then that's going to bring to a convergence of value. And that essentially is going to take out some of the projects that the market determines that not to be sustainable. So that's a very long answer to your question. And how I would summarize it is that it's still being developed. And I would compare digital assets today, the valuation, to equities 20 years ago. At the same time, on the other side of the coin is that it's precisely because the industry is intransparent, it's opaque. That's why by having access to a lot of projects, and also by the fact that it's opaque means that there's opportunity for alpha and abnormal return.
Okay.
Right.
I've got the next question is in the chat box. It's rather long, but I'm going to read it all out. I've read some news on how a particular business model can be made into an NFT, and through this generate real world currency to implement the business model into the real world. Example is a particular schooling method together with setting up bricks and mortar buildings, where the schooling method can be set up in developing countries. This concept was turned into an NFT available to investors. What other charity initiatives do you see, and do you think this can be applied in a metaverse as well? Lucy, can you share your thoughts?
I'm afraid I don't understand that question. One takeaway I think I'll take from it is charitable, how blockchain can be used for good. Actually, it's really great that now money can be directed to specific wallets, to specific projects, to specific individuals with incredible granularity. And that's a really exciting part of actually how philanthropy and charity is really going to, I think the biggest issue everybody has with giving money to great causes is, do I know that it's actually making an impact? Do I know it's actually getting to the end person? So, building projects, I think that question was talking about building specific projects and really knowing that your funds are being used in a specific way and it can be proved. I think, yes, and maybe there's a way of tracking with NFTs as well, that certain donated funds, because you've made them unique in some sense, they are actually being used for what they said they were going to be used for. So I would say yes. I mean, there's a lot more clarity with blockchain now in terms of how you use your funds and knowing what your funds are being used for.
Esme, I know you've got some content in your slides on crypto philanthropy.
Right. Yeah, I'll just quickly go through that. So I think Lucy summarized it very well. So I will also point your attention to a Impact NFT conference if you're in Hong Kong. So there's an Impact NFT exhibition that was being held in Soho Health in Sheung Wan. And that's a very good test case and pilot project of using NFTs for charitable donations. And Lucy is right to point out that so that gives transparency, because you're able to track where your funds are being directed to and how it's being deployed, fully transparent through the blockchain. So that's one way of doing it. And back to, just taking a step back. So NFTs is all about having a cut for the owners and also the creators of the work. So by programming that in smart contracts in the blockchain, so you're able to define what percentage of the proceeds go to which entity that you define as you set up your NFT. So I think that's a business model which can be deployed through NFTs into the business model that Robin mentioned in the chat. if that answers your question.
Yeah, and I think there was another question on cyber philanthropy, just crypto philanthropy, sorry, which I think you answered already. Okay, I'm going to say last call for questions to all members of the audience. Please put it in the chat box on the Q&A. In the meantime, I've got a last admin word to hand out to everyone in MAYCHAM, in the Malaysian Chamber of Commerce. We're currently running a survey, and you should have an email on that recently. I've been told to highlight that the lucky draw is a staycation at the JW Marriott. So you might want to put your response into that survey as soon as possible. So I don't see any further questions. Why don't we wrap up here? Any final comments on digital assets, Lucy and Esme? I'll let Lucy go first.
Yeah, no, just thrilled to be here. I think, I the one takeaway that I'd like to give everyone, I feel there's so much interest in crypto and people are sort of craving for a way to understand it and absorb incredible amounts of information very quickly. And I'll just say, just get started with trying to buy some Bitcoin, because I promise you that small step of actually trying to figure out how to get some Bitcoin and have your own private keys, you will be on the learning journey, and it will happen automatically from there, whether you like it or not. So if you want to learn about crypto, get your hands dirty and just get started.
Esme?
Right, sure. And for me, so what I would say is that, so in March, we're going, in 1 month's time, so we're going to have a emerging conference in which we're bringing in some of the leaders and also the pioneers and governments, regulators in our full day of conference. So that's open for all. And Joe, can you please share the details about this later with the members of the Malaysian Chamber of Commerce?
Sure, no problem.
Right, sure. That'll be a avenue for everybody to just get to know and hear from firsthand information, intelligence from the key dominant players that are building and pioneering in the space right now. As I said, so dialogue and being involved is primary to reading any material. So I would encourage every one of you to participate.
Great. So I hope everyone found this session useful. I know for me personally, I cannot agree with Lucy more. When you put your own money to work, that's when you have an additional incentive to keep up to date and to study and to analyze, and you'll be surprised at how fast you get up to speed. This session is meant to be an introductory session for everyone. So I hope you found it useful, and I hope you found it as a good starting point to do and to dig deeper into digital assets. If there is further interest, please do send it around and send it through to MAYCHAM, and maybe I can invite our two very knowledgeable participants to come back for a session too. But in the meantime, not just to members or to non-members too, please do participate in that survey, and maybe you can win a free staycation in JW Marriott. Thank you once again to everyone, and I will wrap up the session here. Great.
Thanks so much, Joe. Thank you, Esme.
Yeah, thanks, Lucy. Thanks, Joe. Thanks, everybody, for participating. It's an honor.
Bye-bye.
Right. Bye. Have a great day. Bye.